Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have AJ Warner, Chief Strategy Officer of Offchain Labs, John Pennington, Head of Business Development at JST Digital, and Anthony Anzalone, Founder and CEO of XION. We're here to discuss the real-world asset ecosystem, innovation that's driving institutional adoption and regulatory framework. It is great to have all of you with us, and of course a number of players within the space. So let's start with you, AJ. Quick representation where you fit within the digital asset ecosystem.
Sure, I'm AJ, Chief Strategy Officer. As you mentioned, we build Arbitrum, which is a blockchain technology stack that has both a public blockchain Arbitrum One, which is a leading DeFi and RWA platform, as well as a mechanism for people to launch their own blockchains, to launch RWAs and other assets in their own environments as well.
Right, and tell us about JST Digital, John.
Yeah, we are a crypto-native financial services firm. We specialize in market making, treasury management, as well as strategic investments, really trying to bring best practice combined with crypto-native expertise to the digital asset world.
All right, and XION.
We are trying to make crypto disappear.
That's interesting. Okay, good topic for this panel. Okay.
Yes, of course.
So expand on that.
Absolutely, no, thank you. Crypto in its current state is unusable unless you know all the jargon and lingo, and I think that's been, speaking of digital assets, the main hurdle for adoption. So we want to remove it, bring Web3 to Web2 instead of Web2 to Web3.
Yeah, which is interesting because I think some of the challenges, whether you're talking about adoption, integration, the evolution of regulation, is understanding your audience and how to explain these concepts to said audience.
Mm-hmm. Yeah, and I think at some point it's bring the benefits, democratize everything, make it accessible to everyone, rather than trying to assume that everyone's going to learn everything to get to you. And I think that that's the biggest blocker that we see. Which
is interesting, AJ, because all of your notes reflect that RWA's real-world asset tokenization is the next institutional frontier.
Yeah, 100%. I think it's really important. We've seen over the last 5-10 years, crypto native assets really sort of coming into the mainstream. But if we want to get sort of to a place where we have $100 billion in assets live on chain to $1 trillion in assets, we're going to have to bring what we call real world assets, which is another way of saying exogenous assets to blockchains existing. Stablecoins is the first thing that's taken off, I think, considerably and actually broken that chasm of what Web3 native things are. We're starting to see money market funds have that same trajectory. I'm excited to see the tokenization of everything. Equities, commodities, really everything. From a back-end perspective, it's much more efficient than traditional legacy systems, and it's also much more inclusive to people, whether they're in the United States or outside the United States. It's just a much better system.
Yeah, and John, you bring up an interesting point that real-world assets, it's all-encompassing, and I think that's part of the challenge with this industry is digital assets. DeFi could mean something to someone else. So when you think about RWAs, or at least in JST's case, where are you focusing underneath that umbrella?
Definitely, I think AJ kicked it off well in saying that it's a digital representation of potentially any asset. I think stablecoins, rightly so, are really the initial use case. They don't often get called RWAs in all of our crypto jargon and lexicon this industry has. For us at JST, we're really interested in what I call RWFAs, real world financial assets. That's the on-chain money market funds, the on-chain credit funds. Whether people find that exciting yet, that's the building blocks of finding something that's useful for folks like ourselves, for corporates, for individuals, and really provides a square one as an industry to build.
So then you would consider stablecoins underneath the RWA?
I personally would. I'm sure there's a lot of people on crypto Twitter, people are probably like, oh.
It really is a tokenized asset.
It's a tokenized digital dollar.
Right.
And stable coins are pretty awesome. I think it's a killer use case #1 of crypto. And we're very active in stable coins. We trade across probably 10 different currencies across the world. It's something that provides real value to people from both the retail level all the way to corporations.
Yeah, and Anthony, would you say that because multi-chain integration is starting to become more seamless and interoperable, that it's helping to advance what you're seeing in the digital asset space?
No, I think it's because we've seen the attempt to rename things like this for a couple years now. First it was synthetic assets, and then it was tokenized securities, and now it's RWAs. And so it's we've kind of been placating to the just core crypto user base for the past, I don't know, 8 years, however long it's been kind of a thing for. Kind of keep renaming it, and I think the more adoption that we kind of see is the only reason that we're seeing kind of an acceptance of this.
Yeah, I think because of the underlying infrastructure and the technology behind tokenization, it's making it easier for TradFi to understand it? Because when I first started covering this, I mean, I've been covering digital assets since 2018, which is kind of a long time in the media space. It almost sounded like an option, like a derivative off of a product, but now once you explain it from the tokenization aspect, you can see why it's not a traditional derivative. And I think, to your point, that's where some of those disconnects were.
Yep.
Do you think this is the institutional frontier, AJ, that if you want sources of liquidity, this is the way that the ecosystem's evolving?
Yeah, I do. I think there's a couple of different things that are happening in parallel, and they're all kind of converging at the same time. One is, I think we're starting to, in some places in the world, get more regulatory clarity around what you can and cannot do with digital representations. I think we're seeing a lot of progress in the United States, Singapore, Hong Kong, Abu Dhabi, Dubai. Like really, a lot of different financial centers of the world are really pushing forward. So, asset managers and issuers are getting much more comfortable, and we're seeing this even with like Biddle and BlackRock, which 6-7 years ago would have shocked you to say that they would have like a tokenized money market fund. Franklin Templeton, the same thing. We work with both of them. And now what we have to figure out is like, well, where is the demand cycle for this, right? Like, how do we integrate this? Because blockchain technology unlocks, things move much more quickly. You can find yield opportunities, you can stack yield opportunities in a much more productive, effective, and efficient fashion than in the traditional systems. And now we just have to get to a place where both users and asset issuers primarily are comfortable to have that interaction.
Right. And John, I think part of that is getting that regulatory framework within the US. It's great that all these products are being introduced, but to be able to achieve this at scale and understand what the operating environment looks like and how you can manage your business within those confines is critical. You don't want to, start introducing billions with the potential for trillions of market cap here, and then all of a sudden enforcement comes out.
Exactly. And from my perspective, our firm operates first and foremost is how do we operate in the regulatory right? How do we be there? As an industry, I know we've all struggled with knowing what are the rules of the road in the past. I'm really excited that it seems like we're getting to a place where we're going to have clear legislation. It's not going to be necessarily regulation purely by enforcement. And at the same time, people operating in the space based on vibes. That's not a way to conduct a business. That's not a way to grow an industry. So I'm really excited for what we should see, knock on wood, in being regulatory clarity.
Yeah, I mean, the innovation that's going to explode from that, because now you will understand what the environment looks like. I think that's the most exciting part.
Yeah, I mean, it's no longer a game of whack-a-mole in this industry. And I'm sure both of you guys can probably attest that it has not been very fun to build because frameworks have changed, like the best practices have changed, and it's just not been fun.
Yeah, but I also think, to your point, the absolute ethos associated with DeFi, blockchain, crypto, whatever you want to call it, you're starting to see that melt away a bit. Where we're able to be nimble, we're able to introduce the technology and so forth. But if you want to scale this, that integration has to happen. I feel like the past year and a half, 2 years, that ethos has really evolved.
Yeah, I mean, I think that it really is. It came from like this cyberpunk kind of mentality to then this. I think we can actually give access to everybody, but there does need to kind of be this conversation that we're having right now in order to even get there.
Yeah, and what's so interesting is because the asset class is so young, 15, 16 years we'll call it, we have had the ability to watch this unfold and from day one for the most part, and right now, maybe in the second or third inning as we're waiting for this framework to evolve. We didn't have this opportunity with bonds or with equities. Yes, market infrastructure and framework is always evolving, but to have witnessed this from the beginning, AJ, with your legal background, you could appreciate that.
Yeah, I think one of the more interesting things that I get really excited about is if we can reinvigorate the capital markets. So like everybody remembers the early stage ICOs, and again, a lot of those projects weren't necessarily of like the highest quality. But if you think about crypto as an asset class in 2025, as well as like the platform to be able to raise capital markets, like it's actually incredible like the innovation you can have. It's the best mechanism to raise capital, right? So if we're talking about like how crypto and RWAs can work, a lot of people talk about money market funds. I actually want to see like how do we democratize access to early stage investment, capital formation, debt issuance, right? All of these things which have historically been either very opaque or very limited in who they can target. I think actually blockchain technology can really unlock a lot of value.
Yeah, and if I could hop across the table and high five you, I would, because John, look, at the end of the day, we tend to think very US or Western centric in terms of what's the value of these things. How can we hedge, how can we trade? But the underlying technology, to AJ's point, is how a couple billion people on the planet transact cross-border payments, alternative forms of capital formation in legacy banking systems that did not exist. So this is bigger than just Bitcoin and trading. this is how the global economy is evolving.
100%. I mean, a great example, we work with a issuer who issues both Mexican as well as US government securities on chain. We work with them as a liquidity provider, providing liquidity in decentralized protocols so people have access to those instruments. People who might not have a brokerage account to go buy a T-bill. That's really cool. I mean, to AJ's point about changing the paradigm of markets, so to speak, to me, this looks a lot like the 90s of ETFs, where started slow, people were interested in ETFs, they liked the efficiency, they liked the lower cost, they liked that they didn't have an opaque financial manager to manage their assets, but it took 10, 15 years to become what ETFs are today of a, whatever it is, a $15 trillion asset class. I think we're kind of at that, I don't know, mid-90s point of RWAs and crypto in general.
I think private credit's going to be a big unlock here.
I was just going to say that.
Both for like just access to existing things, but also on the capital formation side. Like there's one project that we're working with closely called like USDAI, and they're tokenizing, basically collateralizing infrastructure loans backed, and they're going to issue like synthetic assets, which you can basically, in a decentralized way, like fund actually like a lot of this infrastructure innovation, both crypto and non-crypto native assets. And that kind of stuff is just impossible to imagine being done and accessible in a traditional legacy system. So I think private credit in like the traditional sense, like Apollo started bringing assets on chain, and also these sort of unlocks of like, I don't know, maybe like the 2025 version of crowdfunding is going to be a very interesting, like I think, convergence of what blockchain can unlock.
Right, and I think you both are saying the same thing with two different types of asset classes, because to your point about private credit, I just had this conversation on a panel yesterday that the demand that retail investors and advisors have for alternative investments and funds, which you can include this under that umbrella for the time being. I think because you're seeing that in TradFi and DeFi happening parallel, they're both catalysts for each other. Would you agree to a certain extent?
Yeah, I mean, and I think to even take a step back from that, right, there's a global element to this where blockchain in and of itself is just on a baseline completely global, where you have people from Jakarta being able to access something that probably would not have been able to been accessed. And I think you open up that market, talk about the 2025 version of crowdfunding, like, yes, there is the Western perspective, there's Europe, but you really need to look into where Africa, APAC, a lot of these countries that would not have typically had access to what we're building, I think that's where the real massive unlock is. So like, yes, we can get.
I think the next thing is that the industry has to address, in fairness though, is data governance, security, and so forth. I mean,
100%.
particularly when you're thinking about financial services, if you use blockchain as a medium for healthcare, with all those privacy rules and so forth, like that does have to be
That use
addressed.
case I never understood.
Right. Well, but at the end of
Just
the
a
day,
HIPAA violation right now.
right, but that's going to be critical to. I mean, at the end of the day, financial services. You're under the SEC. You're under a number of agencies when it comes to healthcare. FTC is kind of the umbrella under all that. So these are going to have to be addressed if you're going to get regulator buy-in at some point.
And I think it's going to be interesting to see what happens with rates. If rates continue to go down, like do sort of these like private credit, more structured products get more in demand, and is blockchain a mechanism there? I think like we've seen money market funds as an RWA asset class like explode in the last 6 to 12 months. And I think like it's going to be interesting to see how that plays out along the risk curve as sort of like macro things are happening.
So what about private credit as the next mortgage space? Like it became what banking was with lending restrictions.
Yeah, it's going to be interesting. I think one of the interesting challenges to solve for with these asset managers and issuers is sort of adverse selection, right? Why was this asset class, why was this portfolio tokenized? Why was this fund tokenized? Like amongst all the different things, and making sure that we can have investor protections, the right diligence for either it's retail investors or people who are investing on chain, I think is going to be a big unlock. I think adverse selection is one of the things that I'm still a little bit unsure how we solve for.
Right. John, do you think the answer is because that's where the liquidity is?
It could be. I think that liquidity, and I don't think anyone would disagree with this, but liquidity is still an impediment to RWA growth. We try to work on that day in and day out, 24 hours a day. But yes, I think if liquidity is there, highest quality assets will flow in that direction. I'm also a believer though that if you build things with crypto or blockchain rails that no one wants, no one's going to use them. I think the money market funds on chain have really grown because stablecoin holders want to earn interest. They can stay crypto native, stay in the walled garden of not having to go to the fiat world with on-chain money market funds. If there's a high quality credit fund that they find is worth pursuing rather than going to their private banker, or if they don't have a private banker, exiting the crypto world, yeah, it'll go that direction, but quality needs to be there.
Yeah.
I think liquidity will increase when utility increases, which is a function of regulatory clarity. Right. So we need to get sort of that whole thing solved. Like with regulatory clarity, people will be able to take these assets and use them in more structured or exotic ways, which will bring a lot more liquidity because the yields will be higher. And I think figuring all of those things out, along with the chain of custody of the assets, I'm very hopeful that this is going to happen quickly.
Agree.
Anthony, it's basically where we started out with in the beginning of this conversation that relates to the guardrails.
Yeah.
That's the catalyst here.
Make it disappear.
Yeah, make it disappear. But you know, it's interesting, and I think you can make this argument for emerging technologies overall, not just specific to this conversation, but you do need, to John's point, a problem to solve.
Correct.
Don't just create things because, I don't know, my competitor did it, or should we use whatever Gen AI applications out there to say that we have something. Maybe there's just not a problem to solve.
100%, and I think that's the biggest problem crypto currently has right now is most projects are just a problem looking for a solution.
Right.
Solution looking for a problem, but you know, and I think that whatever it is.
Well, they can be a problem themselves.
We can get both of these.
And
all right?
crypto can be a problem too.
You know, and I think that you have this with every new tech, especially so early as crypto, is that you have so many people trying to innovate for the sake of innovate that you look at like the tech adoption curve where, you know, the typical crossing the chasm where you have this early adopter who want innovation, 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 and then the mass market who just want complete products. And you know, the goal of where I believe we are in crypto is crossing that chasm right now.
Yeah.
I think we were saying earlier about ethos really resonated with me because to me, there's a lot of things that people say the ethos of crypto and blockchain, but to me it comes down to sovereignty and censorship resistance and permissionless behaviors. And I think like that sort of still is flowing through. Even if you look at stablecoins, of course you need like KYC compliance with OFAC, and I'm not sort of saying that we have to do those things. But if you look at like the flow of how you can move money, where you can move it to using crypto rails, we still actually, I think, do have that ethos. I don't want that to go away, like philosophically, I don't think it should, because it's the basis for the operational efficiencies of what we're all trying to accomplish.
Right, that's a great point, but if you want institutional adoption, some things are gonna have to give.
100%,
right?
and that's where we have to, that's where like when we work with asset managers and issuers, that is the big problem we're always trying to solve, whether that's do we add a ZK privacy layer on top? Do we think about confidential transfers? Do we think about how do we build compliance and KYC into the blockchain architecture and node infrastructure that you're running? So we're all trying to solve these problems with the same focus, though, of making sure the operational efficiencies and the rights that blockchains can offer is not sort of subsumed and just recreating the existing system.
But what you said before just sounds like common sense when you think about how the capital markets are evolving to a more digitized place. You were talking about KYC within the blockchain. That just sounds like natural evolution to me.
Yeah, I think what we're starting to see is like multivaried architectures. So like one thing that we've been prioritizing when we've been building our stack is that you have the ability to run it in a permissionless fashion. But if you need or want have these KYC compliance layers built on top, you have that ability, right? So we've built our blockchain software to allow the issuers to sort of get the confidence and comfort to modify the stack either at the application layer or at the infrastructure layer to match basically what they need.
Right, so we have a minute and a half here. John, I'm gonna get your thoughts. Is the space too saturated and it's confusing for people to understand who they should be working with?
I'm not going to say too saturated. I think there's often confusion, and I'm a big proponent of education. While I try to stray away from things like jargon, I think being really clear of what is an RWA, what isn't an RWA, an RW financial asset, stable coins, et cetera. As that education advances, hopefully the space is more approachable, but the folks who are entering the space, the legacy financial institutions, folks like ourselves at this table who've been building in this space for many years, try to be good stewards of what's going on and, again, build a solution, not a solution looking for a problem. So.
That's what we were looking for.
Yeah, we got it. We got it eventually.
All right, guys, we'll leave it on a positive note. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.